Hello, this is Sarah from smallbusinesssarah.com, and today I'm going to show you how I really quickly and easily calculate my business mileage for the year so that I know what amount I can take as a business mileage tax deduction when I file my tax return. So that would be for US based businesses. I don't know internationally how that works. Now, the only reason I can do it this quick and easy way is because I have my personal and my business finances completely separate. So I'm using QuickBooks also, which really helps to make this easy. The version I use is QuickBooks Simple Start. So because my business and personal are separated, only business transactions come into QuickBooks. And when I categorize my transactions, I include the vendor. And that's what's going to make this really easy. So basically, I'm in QuickBooks and I'm on the expenses menu over here and on the vendors menu up here. And because I add vendors as new ones pop up in QuickBooks and then QuickBooks remembers them from then on, I can make this super easy. So there's only a few places that I actually drive to for my business. So Home Depot is one of them. What I can do is I can pull this up and I can see that I made one trip to Home Depot during the year. I'm going to go back and I'm going to do the same thing for a few other places. Lowe's is another place, one trip during 2017. Pat Catan's is another place, and I made 1, 2, 3. This is a return there, so that's one trip. 4, 5, 6. And the last place that I go for business, or at least I did this year, was Target. And I had 3 trips to Target. So now that I know that, oh, and by the way, normally I would have a couple trips to the post office, but for whatever reason this year I did not. So I am going to take that information over to my little spreadsheet. This is my mileage section. I'm just doing this off to the side of my inventory count that I had to do for the end of 17. And as you can see, I wrote down the places that I went, the number of trips. I calculated my round trip mileage to each place, so there and back. I just used MapQuest to do that. And then the mileage rate for 2017 was 0.535 cents per mile. And so basically this is just a formula. I took the number of trips times the round trip mileage times the mileage rate to give me what I should get paid, or not paid, but what deduction I can take for that trip. And so all of that is calculated the same way, and then this is totaled. And so now I can take a $24.29 mileage tax deduction when I do my taxes, which that was so easy for me to do. It wasn't a lot of money in my case, only $24, but I'll take it. I mean, that's $24 less that I'm having to pay taxes on. The correct way to do mileage, this is not the IRS correct way, although I feel confident doing things this way because I'm using my business credit card when I go these places. Therefore, I know I drove there for a business purpose. That's kind of how I justify my method in my head. The correct way to do it is to have a piece of paper with you in the car and then jot down anytime you drive to a place and use the odometer readings to know your business mileage. I actually have an article about that, about how to correctly do business mileage, that I will link to below. But I feel like this is true business mileage. It is reliable because I used my business credit card, so I know that these were for a business purpose. I went to Home Depot and Lowe's a bunch of other times during the year for personal reasons, but I used my personal card then, so I know not to count those. So we're going to hop back over to QuickBooks, and I'm going to show you how to make that entry. Let me just remember, 2429. Okay, so we're going to come up here to plus, do a journal entry. I'm going to set the date to be December 31st of 17. So kind of like an end of year entry type thing. The expense account I'm going to hit is my mileage expense account, which I think I created an account called mileage. You can do that on your chart of accounts screen. Sorry. 2429. QuickBooks is gonna, oh, they didn't that time. I was going to say they're going to try and balance it for me because debits and credits do have to equal. This was basically an owner contribution. Oh, they did balance it for me. The reason why I selected owner contribution, it's an owner's equity account, is because this is basically money that I ate, my personal money paid for the wear and tear and gas on my car. But really the IRS is giving me that business tax deduction for it. So I'm going to hit save and close. And we're all done. So that's my easy way to do a mileage calculation for your tax deduction whenever you're doing your business tax return. I hope that was helpful. Let me know if you have questions below.